How many Section 21s were truly served? We don't know, because it could be 600,000 and 5% of them get to court, for example. But even though we don't have the records, one of my predictions is we will see a record number served before the 1st of May 2026, because again, it's this panic over what's in the bill, which is now an act, versus what actually happens in these situations. And there will be all of these wonderfully convoluted scenarios. That's how the law plays out in anger for things that have never happened before, are very unlikely to happen again, but it's making people very, very nervous. And ultimately, the moral of the story is when you dramatically change the risks in an environment, in an investment environment, then the actors in that environment will act differently. And you're seeing a much larger perceived risk to landlords, to asset owners, and therefore they either demand higher returns or they want to get out. It's slightly different with property because once people are in, they're much, much, much slower to get out, but we've already seen a significant amount of disposal going on. So never say never, but I think base 3.25, 3.5 is a pretty good bet for 12 months' time. I think we'll probably still be seeing 5-year rate of interest around the 5 to 5.25% mark, cheapest in the marketplace. Obviously, if you're looking at premium loans, if you're looking at niche stuff, it's still going to be more expensive. So if you're sitting waiting for the 5-year rate to go down, I think that's probably relatively unlikely. And we've still got this bigger problem down the pipe with particularly high long-term bond yields. Will that all be sorted by the budget? The 2025 budget, which was a much more of a non-event really than the 2024 one. I don't know. They haven't done too much proactively to harm the economy, whereas, putting national employers' national insurance up like they did last time was a genuine market shock. There's no shocks in there. We should probably talk about the mansion tax at some point because it was kind of on the cards, really, and whether that will really influence things. I did have someone say to me the other day, well, it's 10% off the price of all property, whole country, 10% off. There you go. I thought that seems a little knee-jerk to me. And I explained to him in the nice way, the property market does not work in a top-down way in the United Kingdom. It works in a bottom-up way. We start as first-time buyers. We try and creep up the ladder. Most of us only ever dream of living in a house that's worth 2 million, let alone 5 million. Whilst I accept there'll be edge cases where Doreen is 146 years old and, she bought a flat in Richmond or wherever for 700 quid under right to buy, but now it's worth 8 million and she hasn't got any money because she's surviving on the state pension. Most people aren't going to feel too sorry for Doreen, or maybe point her to an equity release advisor